Greetings, everyone. Well, we have more clarity now in terms of the investment landscape after the election. And I wanted to talk a little bit about deja vu for me. I started my career really in the early 80s. And at the time, we had the Reagan administration and a lot of controversy about everything, much of which we're hearing today, the same kinds of controversy. So I wanted to take you a little bit through the macros, what the Trump administration says it wants versus what might likely happen given that backdrop, as well as how this clarity is going to impact the world of innovation. The world of transformative innovation. And we believe the world is transforming and in miraculous ways. So we want to take you through some of that and how this administration, its policies are probably going to accelerate these changes. So let's talk about macros first. In the early days of the Reagan administration, there were back-to-back recessions, and interest rates hit 15%. And that was a very difficult environment for investing. Well, President Trump is coming into office when that part of the equivalent in the Reagan administration has been done. And I remember after that, the 80s and 90s were the golden age of active equity investing. And I think we're going back there. First of all, in terms of the controversy, a deficit back then, after back-to-back recessions, 5.5%. The bond market was apoplectic about that. Investors were as well. And what they didn't understand is that the Reagan policies of tax cuts, along with lower interest rates caused by Volcker, moving from double-digit interest rates to something much lower, that those were going to be very positive for economic growth, and that we were going to grow our way out of the deficit. That growth out of the deficit started in the 80s with the Reagan administration and finished in the 90s with the Clinton administration, taking us into a surplus. We think we're going to experience somewhat of the same thing this time around. The tax cuts, we believe, are critically important, especially if Trump makes good on his tariff promise.
With its most recent revelations, Nvidia, a semiconductor titan known for its inventive capabilities in the field of artificial intelligence, might potentially double its stock value again in the upcoming year. As rumors of this revolutionary development spread through financial circles and tech firms, major players like TSMC and Morgan Stanley are joining the conversation. This saga unfolds more as a comprehensive storyline of technological evolution and strategic growth than merely a stock tip. At the center of the buzz is Nvidia's Blackwell architecture, a groundbreaking technology that is rumored to revolutionize the GPU market and is already selling out a year in advance. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Pro-growth, and he's not going to do anything to impede growth in that way. He wants the dollar down. He thinks that will make us more competitive. What I think will happen is the returns on invested capital in the United States relative to those elsewhere in the world, they're going to increase, and that is going to attract more capital, which will actually boost the dollar. Now, in terms of interest rates, the dollar going up is anti-inflationary, as is the productivity growth associated with a burst in activity caused by lower tax rates and other incentives for investing. So if inflation is going to surprise on the low side of expectations, that's going to be very good for innovation.
One may wonder how a company can continue to defy gravity in the stock market so spectacularly, and the answer lies in Nvidia's AI-centric innovations, which have emerged as the lifeblood of its revenue surge. As we unravel Nvidia's journey over the past few years, we see a tale that is nothing short of a riveting saga, with its shares rising an astounding 80% since the start of 2023. During their November earnings call, Nvidia unveiled the Blackwell architecture, the newest jewel in their crown. The management of Nvidia revealed a bright future, pointing out that these state-of-the-art GPUs are not just in production but are also selling out faster than expected, leaving stores with out-of-stock signs in their wake. However, in the fascinating world of semiconductors, hype is insufficient. Supply and demand are the real currencies here. Nvidia appears to have struck gold even though demand is much exceeding TSMC, the reliable maker of Nvidia's chips, has pledged to double its output capacity. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
A lot of investors have had trouble believing that it would stay under control. The way inflation will stay under control is productivity growth, and we're already seeing strong productivity growth thanks to artificial intelligence and other new technologies, as well as actually the dollar firming. Most commodity prices are priced in dollars. Most commodities are priced in dollars, I should say. And the dollar going up means downward pressure on commodity prices. That's a very good thing as well. So what will happen to interest rates here? Now, this is a little different from the 80s. Interest rates were so high at the beginning of the 80s, 15%, that really, if the Reagan administration got anything right, those interest rates would come down. And they certainly have. Now, 45 years later, they are high relative to recent history, 5% on the Fed.
IDC states that in order to satisfy the rapidly increasing demand from Nvidia and its competitors, an astounding 660,000 chip-on-wafer-on-substrate units are to be produced. When we take into account market estimates, this story becomes much more captivating. The company's joy is evident, and there is no shortage of clever joking among personnel. For 2025, Nvidia has reserved about 60% of TSMC's advanced packaging capacity. Morgan Stanley has also projected that up to 70,000 Blackwell B200 systems will be shipped, with each one possibly selling for much to $3 million. It's evident when Nvidia takes action that the financial outlook is becoming more optimistic. Analysts estimate that the company's revenue might reach an incredible $195 billion in fiscal 2026, which would be a huge increase from this year's $129 billion figure. The ripple effects are felt in the AI market. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Rates are going to come down. We're probably going to wait if we're businesses and consumers. This is classic. It even happened during the Reagan administration when he phased in tax cuts over 3 years. Most people just waited until the tax rates were at the point he had promised. So we probably will see some holding back of activity in the next year in anticipation of even lower tax rates. So I think interest rates will be biased to the downside. Thereafter, I think we're going to see an explosion in productivity growth. That's what the convergence among the major innovation platforms around which we've centered our research. So robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the healthcare space. Those platforms are converging and we believe are going to unlock explosive productivity growth, explosive GDP growth, and much lower than expected inflation because all of these platforms are deflationary. They're
Nvidia's stock is poised for both stability and spectacular growth as we approach 2025. Analysts are clearly predicting an earnings surge of at least 50%, which stands in sharp contrast to the S&P 500's modest 12% prediction. If Nvidia maintains its strong pace and maintains an earnings multiple in the vicinity of 55 for those who are deeply committed in the future trajectory of AI, a jump to $275 per share is very likely. More than merely an alluring investment, Nvidia provides access to cutting-edge advancement and significant financial gain. Investors would be wise to keep Nvidia as a cornerstone of their portfolios in a world where technological advancements happen at the speed of light. But let's ask you this. Do you think Nvidia is the leading torchbearer in the AI revolution, or do other contenders command your attention? Engage with us, share your thoughts, and strategically position yourself for the sweeping innovations of tomorrow. Finally, if you'd like to know what companies like Nvidia have been up to lately, click the next video on your screen and we'll see you there.